In Lesson 13-2, we're going to record employer payroll taxes. If you remember from Lesson 13.1, we recorded the employees' payroll taxes. Now we're going to the employers. Again, so our learning objective is to calculate and record employer payroll taxes. Employers must pay to the government the taxes withheld from employees' earnings. 3 Green has withheld federal income tax, Social Security tax, and Medicare tax from employees' wages and salaries. The amounts withheld for liabilities to the business until they are actually paid to the government. So they are liabilities, and then we will pay them to the government. In addition, employers must pay several of their own payroll taxes. Employer payroll taxes are business expenses and are recorded in the payroll tax expense account. Most employers must pay for separate payroll taxes. These taxes are Social Security, Medicare, and federal unemployment and state unemployment taxes. So these, now we're talking employer payroll taxes. They pay these 4 taxes on the salary that they pay to their employees. Social Security and Medicare taxes are the only payroll taxes paid by both employees and employers. You notice from before, we withheld Social Security and Medicare from our employees, and the employer has to pay them also. A business pays the same amount of Social Security tax and Medicare tax as the amount withheld from their employees. Congress sets the Social Security and Medicare tax rates. Remember, for this book, we are using a Social Security tax rate of 6.2% and Medicare of 1.45%. And also, Congress may change the tax base for Social Security. And then again, in this book, it's $106,800. Today's tax base is over $140,000 in real life. The Federal Unemployment Tax, Futa, created a national program to provide cash payments to employees who lose their jobs through no fault of their own. Federal unemployment insurance laws require that employers pay taxes to fund the unemployment benefits. These taxes are used to pay workers' benefits for a limited period of unemployment and to administer the unemployment benefit program. A federal tax paid by employers to administer the unemployment program is called federal unemployment tax, commonly referred to as FUTA. State unemployment tax. Unemployment benefits are paid by state unemployment programs. A state tax paid by employers that is used to pay benefits to unemployed workers is called the state unemployment tax and commonly referred to as SUTA. And again, it follows the same guidelines as the federal. The FUTA tax rate is 6.2% of the FUTA tax base. Currently, the first $7,000 earned by each employee. So as an employer, you have to pay 6.2% in federal unemployment tax for the first $7,000 earned by each employee, which doesn't take the whole year for most people. This is broken down. Okay, employers can generally deduct from federal unemployment payments the amount they pay to the state unemployment program. So if they pay to the state unemployment program of 5.4% to the state, 5.4 minus 6.2, 0.8% will go to the federal government. So the 6.2% is broken down into state and federal. Next, we're going to calculate unemployment taxes. Remember now, your unemployment tax, they pay up to the first $7,000 of accumulative earnings. So if you take a look at this table here, it says your employees are listed here, prior accumulative earnings. So you can see that there are a couple of them that have reached the $7,000 base for unemployment. Remember, we're just calculating unemployment taxes now. And so you can see that this person here, John, has reached $7,000. This one, Mary, and Justin. Carrie's close. Anthony's getting there, and Anne's quite a ways away. Okay, so our next thing is we're going to look at the earnings to equal the tax base. So they've already reached the 7,000. This one right here, Anthony needs to earn $1,740 more before they reach the tax base. And if you take 7,000 minus $1,648, you'll come up with this amount. These two have reached the tax base of $7,000, and 7,000 minus $6,490. Carrie still has $510 that is unemployment taxable. Okay, this is the earnings for the current period. Now they went through the pay period, and this is how much money that they made this pay period. And then the last part is the FUTA earnings. So of this pay period, this one, 0 is taxable because they've reached the tax base. The whole amount here is taxable because they still need $1,740 before they reach $7,000. Okay, this lady here, Anne, she earned $240. She has not reached the tax base yet, so all of hers is taxable. These two are not. And this one here, Carrie, earned $1,444 this period, but he only needed $510 before he got up to his taxable earnings. So it's the FUTA earnings. We will add that up, and for all of your employees, this is the amount that is subject to federal unemployment tax and state unemployment tax. We go to our journal entry, record the employer payroll tax expense, $757.01 for semi-monthly pay period ended December 1st or 15th. Taxes owed are Social Security, Medicare, federal unemployment, and state. So the total amount of your payroll taxes, it's an expense. We're going to debit it. We will credit all of our taxes. Remember, they are liabilities, and we will be paying that amount to the government. Going on to journalize, we have our T accounts up here, and we're going to put the date. Payroll tax expense will be debited. Our 4 taxes will be credited, and the memorandum 44. So again, we are looking at employers' payroll taxes, which are those 4. What's the tax rate of 3 Green must pay on employees for each of the following taxes? Social Security, Medicare, unemployment taxes. Okay, remember, Social Security is 6.2%. Medicare, 1.45 of total earnings. FUTA is 0.8% on the first 7,000. And state unemployment is 5.4 on the first 7,000 earned by each. So remember, Social Security, federal unemployment, state unemployment, they all have a tax base. Medicare does not.